Live from Tokyo, this is Insight with me, Sherry-Ann, where we dive deeper into the stories that matter with crucial context and analysis. Beijing pushing mutual funds and big insurers to increase their investments in the equity markets. A briefing by top officials showing the government's determination to boost stocks. Shares of one of NVIDIA's main suppliers fall as it becomes a victim of lofty expectations around AI. SK Hynix reporting record quarterly profits, but investors latching on to its modest spending plans. And Elon Musk says, "Show me the money," to companies that promised President Trump billions of dollars for AI infrastructure, exposing a potential rift within the White House. Chinese stocks have rallied after authorities unveiled their latest move to support markets. A briefing led by CSRC Chairman Wu Qing unveiling policies to guide longer-term capital to stocks. Avril Hong has been following the developments, and Avril, we saw those financials rallying in the morning session.
Absolutely. I mean, you saw what happened with the banks, the insurers. I mean, this is just taking a step back, a lot of anticipation of how Chinese authorities would look to support markets. I mean, events in the past day have really shown us how fragile sentiment is, how sensitive they are to Trump. So investors have kind of looked beyond tariffs and to what action Beijing might take. And of course, ahead of today's briefing, we already got that press release a day ago. So investors were looking for that filling of the blanks. And of course, given how the timing of the briefing was before markets open and the who's who was supposed to be giving the briefing, there was a lot of anticipation. And ultimately what we got was how these mid-long-term funds will be kind of encouraged to invest in onshore stocks. And we also saw some loosening of the rules when it comes to, the national pension fund, the speeding up of these ETF approvals as well. And overall, I think the investor reception has been positive to this. I mean, you think about when it's the turnover for China's stock market, I think it's roughly 60% still coming from the retail investors. So the participation boosted from institutional investors. This is seen as a welcome sign by investors. Certainly, CSI 300 climbed as much as 1.8% earlier, so more than erasing yesterday's declines, outperforming what we're seeing in the Hong Kong space. And this is also, I think, more than recouping the declines of a day ago. Also worth noting here that there are still some lingering questions. I mean, when you look at how, is there going to be a boost beyond the short-term sentiment and actually the channeling of capital? And think also that how traders, some of them might be choosing to take profit off the table, given we're just, not far from the long holiday season. Keep in mind as well, when you look at the A versus the H share premiums, there's some expectation that given the government support, that we could see further widening of that as well, Sherry.
Yeah, I mean, there are questions about how long it will take for those insurers to really lift that equity exposure, right? But Avril, do stick around because we want to discuss this with Audrey Go, Head of Asset Allocation at Standard Chartered Wealth Management. Audrey, great to have you with us. Avril just making really important points right now about these new measures by Beijing in order to lift sentiment and support the stock market. But I do wonder how sustainable this tailwind will be when we, of course, still have tariff threats and an uncertain policy from the Trump administration.
So we do believe that this is a step in the right direction in terms of policy support by the Chinese authorities to the Chinese markets. However, I think more needs to be done because if we look at the scale of stimulus so far, they have been drips and drops. And if we think about the amount of stimulus since September till now, they're probably to the tune of low single digits in terms of percentage of GDP. And that clearly paled in comparison to what they did, say, back during 2015, 2016, as well as 2007, where they spent to the tune of 15 to 30% of GDP in order to support markets and growth. So I think step in the right direction, but we probably look forward to more details, more announcements of policy stimulus in their upcoming meeting in March this year, which I think many investors will be anticipating.
And what about the tariff threats? Is there any right now estimate of how impactful they could be, especially to the broader stock markets in China?
So day one and day two in terms of Trump's taking office has been quite reasonably constructive where China market is concerned, given that there is no announcement on emergency powers on trade neither were there any tariffs being imposed on any countries for that matter, right? And if you look at what came subsequently, where Trump basically said that the 10% blanket tariff on China is probably still on the table, I think that will pretty much remain as a risk overhang on markets for now. And if we think about the range of impact that it may have on the Chinese economic growth, I think depending on the amount, say, whether it's a 10% blanket tariff or even a 60% blanket tariff, we might well see an impact to growth to the tune of, say, between 0.5 to as high as 2%. And it really depends on what is the eventual number being announced by Trump. But our base case is one where I think the administration within Trump's party will probably take a more saner approach, either adopting for something a bit milder or something along the line of gradual tariffs over the course of the next few years, and even trying to strike some deals to be reached with China, right, where China can buy some quality products from the US, vice versa, or in return for lower tariffs or even no tariffs at all. So those are the developments we'll probably want to keep a watch out for over the course of the coming weeks as Trump continue in his office.
Might gradual tariffs be actually a bit more problematic for not just China, but also the likes of the Federal Reserve? Because some have likened that approach to akin to a number of supply shocks coming in eventually.
So I think the key risk to watch out for is really inflation, because if you think about just a one-off tariff increase, that will probably drive a one-off higher in terms of price levels, and then markets sort of look beyond that, and life goes on. But if you think about a more gradual approach, then I think it could certainly heighten price expectation in terms of long-term inflation expectation. And it's still a question mark to what extent will that be accounted for, reflected for by the Federal Reserve. So for now, I think in the near term, if tariffs were to be gradual, markets will probably take it quite positively. I think then longer term, then we will have to assess how inflation expectation actually evolves from a price perspective to see how it really cascade much higher expectation down the road, and then triggering tighter policies coming from central bank, then that might really hit markets more significantly.
Right, and authorities in China will certainly be assessing as well.
Yes.
But when it comes to the kind of stimulus that you think we ultimately might see from them beyond this drip feed, what do you think ultimately is going to be the impact on the earnings story for China this year and the next?
So for now, the policy measures, supportive measure has been pretty limited, or drip feeds, as you mentioned. Our expectation is they probably continue on the road of easing monetary policy, whether it's in terms of rate cuts, or in terms of trying to drive some stabilization when it comes to borrowing costs for their corporations. And in fact, some of the measures that they have initiated since last year have seen some decent sort of improvement in sentiment, where we've seen property developers' sentiment actually improving at the margin. So I think those are useful measures. I think furthermore, I think we can also look at more measures in terms of trying to boost consumption, which is probably one key area that the Chinese authorities want to develop long term in order to really move away the reliance on trade and on investments only.
Can you imagine the PBOC just outright purchasing stocks and ETFs from the market directly at some point? We saw the Bank of Japan, for example, doing exactly that. If the situation becomes more dire for the markets with tariff uncertainty, could that be an option?
Yeah, clearly that could be one option that they might want to pursue, because we have seen the Japanese done it before, and it does have a positive impact, especially in trying to bring Japan economy out of this deflationary cycle that they've been for the last maybe 30 years or so. So clearly one step that the Chinese authorities can make, and they certainly have the team or the ammunition available to do that in terms of the team champions, national champions that they have at their disposal. But for now, I think if we think about what's been announced from the Trump administration so far, they're probably not at this juncture, because we've also not seen a lot of clarity with regards on how Trump would engage with China in terms of trade. So the more likely scenario is, once that gathers more clarity, at least on the trade front, then we might then see more concrete policy action coming through from the Chinese authorities to think about how they can better support economic growth as well as asset markets in China.
For now, though, we have the likes of the BOJ. The expectation is that they will move tomorrow. Whether you're looking at swaps or what economists are expecting, why not, perhaps wait until we get more clarity on tariffs?
I think for now, if we think about Japan, they haven't really been the target by Trump as yet, right? So if you look at the countries that Trump is targeting, it's really the likes of China, Canada, Mexico, and to a certain degree, European country as well. So Japan has been relatively insulated. And I think when it comes to the rate hike coming through, I think market is already pricing in one rate hike by the BOJ meeting. So that's quite priced already for now. So I think from a yen perspective, we might well see, what we call it as, buy the rumors and sell on fact in terms of how the yen may trade after the policy meeting. And I also do feel that it may be a rather unappreciated risk in terms of, the BOJ hiking beyond the 2 rate hike that's been priced by the market today. Because if you look at the overall inflation trajectory, the Japanese economy have seen inflation or headline inflation trading above 2% mark since 2022 till now, 2023 till now. So it's about 2 years or so. And at the same time, if you look at wage growth, domestic wage growth itself, which is a key metric that the central bank governor is watching, it has also been on an upward trajectory, and now it's now hitting 3%. And if we think about what is going to be upcoming in terms of the Shunto negotiation in spring, later in March as well, I think grapevines also suggest somewhere in between 4 to 5% sort of wage hike as well, potentially. So it's actually quite robust, at least where inflationary pressure is concerned. So I think they are quite ripe to actually hike rates, and the risk is they might hike more than what market expects.
Yeah, the macro picture supports BOJ move. But what do you think Ueda would have to say to signal to the markets tomorrow that this is not a dovish hike?
I think he'll be quite careful, because the last hike back in July, he did a hawkish hike, right? And that triggered some market rout in currency markets, in equity markets, bond markets as well. So I think he might well err on the side of caution and just deliver one rate hike and probably sound really neutral in terms of forward guidance, or even not giving any forward guidance at all, in order not to jeopardize the market. But our sense is, over a longer term horizon or 12 months horizon, the trend where the yen is going to move toward is probably biased to maybe a stronger yen rather than a weaker yen.
Oh, that is interesting, really. How have you come to that conclusion, given, of course, that we do have also the rate differentials in play with the Federal Reserve?
So if we look at the rate differential between Japan versus the US, even with the rate hike or even 2 rate hikes, there's still going to be a very wide differential between both economies. So that's also likely to support, at the margin, some US dollar strength for that matter. But I think optically, if we think about Trump being at the helm, and one of his first priorities is to really rebalance the trade relationship with different countries, he might well favor a weaker dollar vis-a-vis some of his trading partner. So I think from an optics perspective, I think that may also bias the yen towards a slightly stronger trajectory. And we've also seen that during the first Trump era in 2017 towards early 2018. So that's one. And the second thing is, as well, is if we look at inflation as well, right now headline inflation is probably around 2.9%. And the next inflation print tomorrow, I think, is going to come in at around above 3%, 3.2 to 3.4%. So they are actually quite ripe to normalize the monetary policy, because among developed markets today, if we look at real interest rates, Japan is probably one of the most negative in terms of developed market economies. And yet their economy is not really in any dire need of stimulus, because it's doing quite reasonably okay.
And that was really interesting for me, that we have been talking about a stronger US dollar when we have heard from President Trump numerous times, even during his first presidency, that he doesn't like to see very weak foreign currencies, because that's not helpful, that they're actually cheating when it comes to becoming trade partners and the trade surplus and so forth. When it comes to this rotation among sectors, some of the Trump trades that have been played out, if the calculation changes to a weaker dollar instead of a stronger dollar, what will you be watching for changes in allocations?
So I think this is one key risk or area that we are monitoring quite closely, because in the event we do see a weak dollar or significantly weaker dollar, then what this means is we'll probably get lower use at the same time and looser monetary conditions. And that's probably quite a risk-on sort of environment where equity markets are concerned. And obviously the likes of US equities will do well, but it is really the rest of the world which has really significantly lagged the performance of the US, which will likely do even better. So if you think about a weaker dollar, that could well mean a stronger emerging market currencies, potentially even a stronger yuan for that matter. So the likes of Asian equities may have, even emerging markets will probably have better performance on the back of that. And then from a sector perspective, at least in the US, a weaker dollar certainly will benefit the likes of tech, because they tend to be a lot more export-oriented. But having said that, in the US, we also have policy deregulation, which is a tailwind, tax cut, which is also another tailwind as well. So that will also likely support some of the more domestically focused areas of the market, for example, in financials, for that matter, as well in small caps, which is also one area that we like within the US.
Audrey, help me understand this. I mean, when it comes to Trump, obviously he's seen as somebody that's really pro-business. We look at the past day and what he's announced for AI spending, but is there a disconnect between what they are aspiring for in terms of funding, perhaps, and what they can actually bring to the table?
So I think if we look at his recent announcement of a joint venture of an AI-related investments into the US, I think top of mind is probably trying to ensure that the US regains or maintain their supremacy when it comes to advanced technology, when it comes to AI. And I think given that if you look at technology stock as a sector, that's a big chunk of the US market, close to 40%. So I see that announcements having lesser sort of guardrails around AI and allowing them to really develop capabilities at full speed ahead as a potentially a constructive area for the market and supporting US equities. But obviously, from a more personal perspective, I think we do need certain guardrails on AI to avoid misuse, right? But again, from a market perspective, they probably don't read it as intently as what we do.
So, Audrey, what was interesting about April's question and what she's alluding to, that perhaps the funding is not necessarily there when it comes to these investment commitments that are being made. My question would be, is intent to invest enough to justify these frothy valuations that we're already seeing if we continue to see this American exceptionalism and tech exceptionalism in 2025?
So I think valuations have always been a thorn for investors trying to invest in these stocks. And I've always tell my clients, right, if you want something which is great, you wouldn't get it cheap. Similarly, if you want something cheap, it probably wouldn't be great. So the two doesn't go really hand in hand. So for now, our expectation is as long as the outlook, the guidance, the earnings trajectory development continue to develop well in the good direction, these stocks will continue to be quite well bidded by investors, and they should continue doing well. And also, I think if you look at AI, they're probably still at its sort of a beginning stage of nascency. We've seen a lot of attention in AI chip makers, for example, but over time, this should also broaden out to some of the other supporting infrastructure to develop AI, for example, cooling systems, data centers for that matter. So as it progresses, it should also broaden out to the rest of the sector. And let's also not forget the potential productivity gains it could also have for the rest of the economy beyond the tech sector. So that could also help markets and support their valuations.
Audrey Goh, good to have your insights. Head of Asset Allocation at Standard Chartered Wealth Management Group, and of course our own Avril Hong there. But still ahead this hour, we discuss more about tech, the AI infrastructure build-up. EFM Asset Management's Dan Heyler joins us for more. And of course, we do have those results from SK Hynix as well. This is Bloomberg. Mizuho Financial Group CEO says a Bank of Japan rate hike on Friday is about 90% certain, with another tightening likely in July. Speaking to us in Davos, Masahiro Kihara also outlined how he sees the new U.S. administration impacting business for Japan's third biggest bank.
President Trump is very, very friendly to the business, and I think that will be generally that will be a plus to the banking industry. For us, we have a sizable operation in the U.S. We have been adding capabilities in the investment banking area, so this will be a good opportunity for us too. Yeah.
What opportunities do you see? We know that you'd like to expand your M&As, for instance.
Sure.
What are the plans?
So 2 years ago, we purchased a M&A boutique firm called Greenhill. And that has added a lot of transaction to our platform in the U.S., but also cross-border. So I think moving on, we should fully integrate this Green Hill platform into a Mizuho platform, and then we can collaborate. Those platforms can collaborate, and that will increase our transactions.
So that Green Hill
Yes.
acquisition
Yes.
is going smoothly.
Very well.
What can be expected in the next 12, 24 months?
Well, I would say that increased transactions, it means that the M&A transactions will increase. Also,
Can you put a figure to it? Can you put a number?
well, that's a little bit difficult for me at this moment, but but also our revenue, let's say 25% comes from US, actually. I guess we're probably aiming to sort of move that into 30% or so. That can be done, I think.
Okay, we have to talk about the BOJ.
Sure.
Expectations are high that the BOJ will hike on Friday. Is that 100%?
Well, there's no 100% in this world, but I think
99%.
But I would say there is a high chance, 90% probably. I mean, BOJ was looking what this new President Trump's how it will come out. I think there was no, out of expectations. BOJ has confirmed that probably there will be 3 years of consecutive wage increase. So I think there is a circumstance environment set for them to raise rates. Yes.
Okay, so if it does raise rates on Friday, when could be the next move? It wouldn't be one and done.
Right. So July, making sure that the next wage increase will turn into increasing consumption in Japan. So July, and then maybe next January or February.
What might the movements be in the market? The last time the BOJ raised rates, we saw stocks slump 14%.
Right.
And we saw the unwinding of the yen carry trade.
Yes. Well, I guess it's the issue of conversation, dialogue with the market. And I think this time they are doing a good dialogue with the market, I think. So I don't think there will be a surprise in the market this time. Fundamentally, if you think why they are raising rates, it is because the fundamentals are good. There's wage increase, there's an increase in consumptions. So, there shouldn't be a surprise. That's what I think.
Do you think the BOJ might consider what the next move would be for the Fed and what the Fed might be doing in 2025?
Well, that would only be when BOJ will not, the Fed will not be able to, move down the interest rate because of because inflation is sticky. Maybe that might be a concern for them because that means that the U.S. economy might go down. So, but as far as they don't see it, I don't think they will care about Fed's movement. Not that much.
Projection for the yen, some say 140, 145.
Yeah.
And how would that impact your business?
Yeah, so I would say somewhere around 145 is the area that should go. As I said, 40% of our revenue comes from abroad,
right.
Which means that when you calculate the profits into yen, it will decrease a little bit.
Mizuho Financial CEO Masahiro Kihara with Bloomberg's Haslinda Amin in Davos. We'll have plenty more ahead. This is Bloomberg. Welcome back. You're watching Insight. Take a look at how SK Hynix is trading at the moment. We're seeing the worst day in more than a week after the chipmaker's modest capex plans failed to impress investors looking for stronger forecasts on AI demand for advanced memory chips. SK Hynix did report record quarterly profit and also a 75% jump in sales in line with analysts' estimates. The chipmaker expecting sales of high bandwidth memory to more than double this year. We have seen the stock already rally about 30% this month alone. So you're seeing a little bit of sell the news in today's session. We're also, of course, keeping an eye on Trump's massive Stargate venture, promising hundreds of billions of dollars in investments into AI infrastructure. The information is reporting that OpenAI and SoftBank are each committing $19 billion to the venture. But public sniping has broken out over the project's funding between Elon Musk and OpenAI Sam Altman. Musk openly questioning whether the partners will be able to follow through on their promises, saying in the next post they don't actually have the money. Musk calling out SoftBank specifically, claiming the Japanese company has less than $10 billion secured. Altman fired back on X, saying, "What's great for the country isn't always what's optimal for Musk's businesses." Meanwhile, the CEO of SoftBank-backed chip designer ARM told Bloomberg's Caroline Hyde the Stargate project will have widespread support and won't need to tap public money.
There is a lot of backing for this, Caroline. Believe me, it was not taken lightly to make the announcement yesterday at the White House with President Trump. So I think you can feel pretty good that the financial backing behind this is quite solid.
Let's get perspective from our next guest. Joining us is Daniel Heyler, senior analyst at EFM Asset Management. Daniel, great to have you with us. How much understanding do you have at this point of these announcements and really the structure of funding when it comes to this AI infrastructure build out in the U.S.? And I guess ultimately the question is, how much will it matter long term given the intent to invest at this point?
Yeah, great. Hi, Sherry. Thanks for having me on. Yeah, it's quite a little bit entertaining to see the back and forth with some personal, I think some personal rivalry going on here between these billionaires. So it's fun to watch. It is a new era of public discourse, which is good and it's healthy. As we look at the spending, I don't think that really is the key benefit overall. The spending clearly will come from many areas. I think where the excitement here on Stargate is it kind of creates a structure and an initiative to coordinate. I mean, you need more coordination of these data centers. There's so much complexity across the entire supply chain, from power to systems to land to water. And I think the U.S. over a number of decades really has lacked that kind of cooperation for industrial policy between Washington and industry. So from that standpoint, I think it's exciting to see that. I think there's a lot of low-hanging fruit in the U.S. to enable these companies to get together and get things built. You need electricians. I mean, look at TSMC. They were delayed a year in Arizona, and they had to pull together all these things together. So it is. I think it's quite exciting to see this era come, and with a lot of support out of Washington to actually execute on industrial policy for the first time in American history.
The CEO of Anthropic calling this a little bit chaotic, though. I mean, do you have an understanding at this point about the stakeholders in this new venture, whether the government will play a role, and how much of a reorganizing of the landscape can you expect now? Because also at the same time, we're seeing Microsoft perhaps offloading some of that AI spending onto rivals.
Yeah, so there's two things. Yeah, so the initial information that's been out on Stargate is there's clearly a collaboration. There are a number of entities involved to push this, but it's a small, really, piece of the overall build. Like just this morning on the Hynix call, they talked about two things that are driving the overall demand for high-performance computing. Not only the AI servers, which are being driven by NVIDIA. Second is the inference data centers, with a lot of ASIC and a lot of in-house spend coming from the CSPs, certainly Google, Amazon, and Microsoft. And then on the other hand, the third leg here, inference is going to be super important. And then a massive upgrade of the actual traditional data centers, because with data centers themselves, they're already quite 5 years old. And space and power consumption is a big issue for core data centers. So you're going to have, in parallel with AI, you're actually going to have general purpose data centers get massively upgraded as well. So clearly, the private sector is the driving force here, as everyone's competing for data and compute power across the whole economy.
You mentioned SK Hynix's earnings. What do you make of the stock reaction right now?
Yeah, well, thanks. Yeah, stocks had a big run, as you said, up 30%. I think the reaction has to do with some profit taking, but also a little bit of softness into the first quarter. And the narrative that we heard again here in January was the same one we heard January last year, is that we have a bifurcation, a polarization between AI-related DRAM, high-performance DRAM, and then the commodity DRAM, which goes into PCs and notebooks and tablets and smartphones. So clearly, they said the bifurcation is going to increase, and you have competition from China. So the market's trying to assess how much of a risk to the weakness elsewhere will impede, and promise of a second-half pickup, which, again, they promised last year was going to be AI PCs, AI phones, and it didn't happen. So kind of, I think the market's a little bit skeptical of an increase in the actual commodity memory, but clearly Hynix is pushing ahead, on the other hand, and leading in high bandwidth memory and high performance DDR4 and low power DDR4.
Yeah, perhaps not surprising, the skepticism given the boom and bust cycles that we've seen when it comes to the DRAM market, right? How exposed is the HBM subset when it comes to those cycles?
Yeah, great question. We all, when companies talk about, like, this time it's different, rarely is it different. It is a commodity, but I think what's different between this year and last year, Sherry, is that the commodity memory as percentage of Hynix business has really come down a lot. So they're not nearly as exposed as they were last year. I think quarter on quarter, the exposure to commodity, non-high performance memory really has gone from 30% to about 20%. So if that continues to go down, then the market may view this as not a super high growth company, maybe a 15% growth company, but with kind of gradual upside to margins. And I think you have to weigh that against valuation. At EFM, we're up 40% last year and it's really driven by a sensitivity between valuation and, of course, these structural themes to get excited about, but you have to know what you want to pay for here.
What is the relationship right now in the buildup of AI infrastructure in the U.S. with these Asian companies, whether it's SK Hynix, Samsung, or TSMC as well? Yeah, so across the board, whether it's the assembly side on Honhai or whether it's packaging, Hynix and TSMC, definitely they're moving forward. For various reasons. Clearly, the CHIPS Act has provided a nice initiative to get some funding. Not only that, an important part, as I said earlier, is the regulatory environment. It's so chaotic and complex in the U.S. with so many levels of government, from municipal to state. It's a federalist system. It's not a central system as you have in China and elsewhere. So I think that bit is moving things around gradually and steadily, and I'm optimistic, but again, it's a new era. It's going to take time for U.S. to really build domestic capability. When it comes to other companies building capability, of course, we have Samsung trying to catch up to SK Hynix. How much time and leeway does SK Hynix have in order to keep this competitive edge?
Yeah, so tech investing, you have to put on different hats. In semis, the hat you have to put on is the idea of catch-up is really, really rare in semis. It's Gordon Moore used to call this the treadmill strategy. Somebody's running a little faster. It's really hard for that person behind to actually pass or even keep up with the leader. And this, clearly, we've seen this in foundry, the sector I love the most, and in memory, it's starting to happen. And as Hynix pulls ahead of both Micron and Samsung, all last year, everybody talked about catch-up, and companies talked about it. But in fact, over 12 months, Hynix's lead has extended. And so I think that will continue to be the case for Hynix.
When we see the complications with NVIDIA's Blackwell chip, what are the implications for all of these companies in the supply chain?
Yeah, so as I said earlier, a lot of what's going on in AI is about coordination across so many different components. And so the delay and the bottlenecks. So clearly this is not an up and to the right growth. It's kind of a steady growth as different bottlenecks have appeared at different points in time. For NVIDIA, it was a chip level first, some yield, they do the math, and it's the assembly. Now it's a system assembly. They have like 10 miles of copper or something in each Blackwell. And then there's the upgrades that they want to improve upon due to these concepts. So I think I'm optimistic. They're kind of working through these one by one. I would think the first half is going to be a little bit softer than expected. I think the market's ready for that. But at some point, we're going to hit this inflection point, third and fourth quarter, where there'll be massive shipment of Blackwells and deployment. These are $6 million tools, plus the fact they are kind of modularizing the Blackwell itself and modularizing the ecosystem where people can just buy the chips, just buy the boards, sub-assemblies, whatever they need. There's going to be a lot more mix and match. The networking bit, they were pushing their own NB72, but now they're more open to gig Ethernet. So a lot of reason to be really optimistic about second half this year in volume, and then 2026, and then the memory play on that, which is clearly Hynix.
When it comes to NVIDIA itself, who would be the closest competitor in the future? We're talking the likes of Intel, AMD. Is there sort of a view right now at this point in time what could happen in the next few years, despite the fact that you said really there is no catch-up when it comes to this sector?
Right, yeah. I mean, Intel, I think I've been negative Intel for 15 years, and it's a slow demise, a genteel demise of, no, I need to be nice. But it's tough. So specific to GPUs, because of the entire ecosystem, Jensen Huang knows that he had to build really a lot of the moats around that business, software and support and everything else. So very strong position, obviously. There is a role for AMD in that area, probably very small segments, certain customers. I think the big upside as it relates to competition would be more segmented AI. Clearly the ASIC or ASSP models that are custom for CSPs where you don't necessarily see general purpose. But other areas, I mean, think about self-driving cars. There's 7 cameras, in the front of a car. And that is massive parallel computing. You're going to need GPUs in those segments. So big market, lots of different segments. It's not clearly one person walking away with it, NVIDIA leading its segment. Some role for AMD and clear role for the captive players, which TSMC supplies to.
Daniel Heyler, really good to get your perspective. Senior analyst at EFM Asset Management, of course, as we continue to follow the latest on the AI boom, not to mention semiconductors and infrastructure buildup. President Trump also downplaying the national security risk posed by TikTok. Speaking on Fox News, he suggested that all electronic products made in China could carry a spying risk. This comes after he delayed a ban on the Chinese-owned app for 75 days through an executive order.
I'll tell you, people want to buy it. People want to buy it.
But those that say they know say it's a spying app for the communist Chinese.
But you can say that about everything made in China. Look, we have our telephones made in China for the most part. We have so many things made in China. So why don't they mention that?
Let me get to
the
some
interesting
issues.
thing with TikTok, though, is you're dealing with a lot of young people. So
they love it.
Is it that important for China to be spying on young people, on young kids watching crazy videos and things?
I don't want China spying on anybody.
No, but they make your telephones and they make your computers and they make a lot of other things. Isn't that a bigger threat?
And we're headed towards the India market opens. Take a look at trading ahead of that. We have seen, of course, that sell-off in the Indian market already. We're down about 12% for the Nifty 50 index since its September record high. Small caps have been really badly hit. So we continue to see right now a little bit of a mixed picture in pre-market trading, but we will be watching some of those stocks with high valuations and the big winners of 2024. The chairman of the State Bank of India thinks the country's growth story is still a positive one, despite, of course, this recent slowdown that we've seen in the economy. CS Setty says it's important to note that rural consumption is increasing and almost catching up with the urban numbers. He spoke in Davos to our colleague Haslinda Amin.
We're talking about an economy that's slowed down from about 8% to about 6% and change. Is that a blip, or is the economy about to pick up again?
First of all, thanks for having me on this show. Among the major economies, India continues to be a good story. And my personal view and our house view is that whatever witnessed in the last 2 quarters would be a blip. The long-term story of Indian economy is intact. And I think the current financial year, of course, the growth rate advanced estimate places around 6.4 to 6.5%. It is obviously the country is looking for higher growth rates, but when you juxtapose it against, and the global economic backdrop of 3.2% growth rate, it still is a significant growth rate in our view.
Well, the thing is, consumption remains lackluster, both urban and rural. How is that impacting your strategy, especially your retail portfolio?
The retail portfolio is still doing well. In the overall banking industry in India, one thing, the rural-urban consumption is the division between rural-urban consumption is going away. That's a good part, right? So the rural consumption is increasing, while the growth rates could be temporarily, slowed down. The important element to note is that the rural and urban consumption almost converging in terms of the levels of consumption. It's a good story. As far as the retail personal loans is concerned, obviously there was some concern about unsecured personal loans, which is slowing down. It's reaching a comfort zone for the regulator. But the home loans is a good story in India. And we see that among the personal loans, the home loan are having a robust growth rate. And the credit growth broadly would be stabilizing around 12 to 13% is our estimate for the banking industry.
Let's talk about risk. Do you see risk coming from the second Trump administration? We know that there are issues when it comes to tech, for instance. India's economy might be impacted. Might that have trickle-down effect? And add to that, of course, we have the Indian rupee trading at close to record lows.
So obviously, the yield movement in the developed economies had resulted in outward flows, which is definitely putting pressure on the central bank in India to relook at, what should be the rate cut in the ensuing February monetary policy. Our assessment is that probably they may have to take a call on the rate cut. This would stem the flows, hopefully, and help the market to. If you have noticed that, despite a strong outflows on the FPI side, the domestic inflows are significant in India now. While the market is impacted by, many decisions with the change of presidency in the US, there is some uncertainty in terms of how it is going to impact India. Our assessment is that there are a lot of things India is getting it right, in the sense that, we have diversified our export base and diversified both in terms of the products, in terms of the markets, which means that even if there is unlikely event of any tariff action against India, I don't think India is going to be impacted badly. But we need to be watchful what is going to happen in case of any tariff on the China is imposed, and what happens to the Chinese production getting diverted to other countries.
State Bank of India Chairman CS Setty speaking in Davos with Bloomberg's Haslinda Amin. We've also spoken to other prominent Indian business leaders and officials at Davos. Here are some of those highlights.
We're excited. I think we're excited as an industry. I think what Trump signifies is pro-growth, pro-business agenda. And I think that's encouraging in early signs that we're seeing from large companies in the US and how they're thinking about spend going into 2025. There's some things we'd obviously have to wait and watch, and what implications those have, the implications on regulation, the implications on tariffs, the implications on immigration, and what do these imply for inflation, and so how do those things look. But just generally, I think the pro-business, pro-simplification, pro-growth agenda is very encouraging.
We want to go the knowledge way.
Okay.
We're looking for more interest from companies in R&D, global GCCs. You do know Hitachi Energy has the world's largest R&D in Tamil Nadu, and the kind of talent that's churning out amazing research from there, amazing R&D from there is now going to the world.
You speak of GCCs, and Tamil Nadu is behind Karnataka and Andhra in GCCs.
It was behind.
So how are you going to catch up?
It was behind. There was a space supply issue. Office space supply issue, and we've corrected that.
Coming up on Insight, Ukraine's president says U.S. troops would be needed for any peacekeeping force in Ukraine as President Trump ramps up pressure for a deal to end Russia's war. Our exclusive interview from Davos is next. This is Bloomberg. President Trump is threatening financial penalties on Russia if Moscow doesn't end the war in Ukraine soon. In a Truth Social post, he suggests President Vladimir Putin should make a deal or face additional tariffs and sanctions on Russian imports to the U.S. Trump campaigned on promises to end the conflict that began with Russia's full-scale invasion in 2022. Ukrainian President Volodymyr Zelenskiy says any effective peacekeeping force in Ukraine must include U.S. troops, as the backing of only European allies won't be enough. Zelenskyy spoke exclusively with Bloomberg at the World Economic Forum in Davos.
It's great if we will have troops, but we have to understand that the troops will not be in the center of the capital. Yes. They will not have relaxed time. Yes, it's very important, because I heard that some allies said that yes, but it's okay, we can be in the center of some city, and then no, we don't need such contingents.
You want the front line?
Yes, with our people, of course. Yes, because this means security, and that's it. So, but it can't be without the United States. I will explain you why. Even if some European friends think that it can be, no, it will not be. First of all, nobody will risk without the United States. The second, that's what can divide NATO, divide EU and USA. That is a goal and dream of Putin, to divide this unity.
You mentioned China. How important is China in these negotiations? I mean, China is the backer of Russia. They seem to have had an impact on things like Putin not using nuclear weapons, those sort of things. Can China push Putin, and do you have any contact with the Chinese?
I had some contacts with Xi Jinping. We had a phone call during the war. Not too much, not enough, I think. Yes, he can push Putin to peace, I'm sure. I think that only President Trump is the strongest, and Xi Jinping. I think that there is no other allies who can really do it. Yes, because his economy, Putin's economy, after sanctions, after everything, depends very much of China.
You would like Donald Trump and Xi Jinping of China to work together to push
I think
push
yes.
Putin.
Yes, but not without us.
No, no.
It's important.
The Ukrainian president speaking exclusively with Bloomberg at Davos. Horizon's middle